Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you, and I've got not one, but 2 months that we're going to trade here. I've got a January trade and a February trade for you, something for everybody today. And you know what else has something for everybody? Tastyworks platform. So please open up an account at tastyworks.com. That's how we keep all this programming free for you. Help support us. By the end of the year, we really would love and appreciate your support. And actually, like and subscribe to this YouTube channel at Tasty Trade. You can also listen to this on my podcast, Option Trades Today. I personally think you get a better experience when you watch this on YouTube because you can see where I go and how I click around on the platform. That's the Tastyworks platform that I'm using. So please open up, transfer, or move an account to Tastyworks today. All right, let's take a look at what's going on in the market. I have the E-mini S&Ps up here right now. They're at or around their most recent low. I like to have the percentage change here, a big percentage change by 2.5%. I remember when it would take a whole month to move the market 2.5%. We seem to do it daily these days. And here's volatility /VX up almost 5%. You have typically have a 2-to-1 over time, a 2-to-1 relationship between volatility and market movement. If the market's down by 2.5%, you usually would have volatility up by about 5%. That's what you have today. So that relationship is hanging in there. No tell or tape reading or market availability there for you to see what's going on, like maybe volatility is staying bid or volatility is getting weak. I think volatility is exactly where it's supposed to be compared to what's going on in the market. Now we've got something here, and it is December 15th. We got a little something going on here. If you take a look at the watch list, I've already set my IVX 5-day change for you, showing you that I like to have it from high to low. You've got volatility upticking here because look at this. You've got a plethora of stocks where over the last 5 days you would expect that with volatility expanding and the market going lower. A lot of stocks here to trade. To save time, I picked a stock for you, TGT, which is Target. One of the first trades for you. Notice the IVX. That's the 5-day change. That's the volatility change to Target over the last 5 days is up by 2.5%. 38.5% is the IV rank. We like to see that IV rank, over 30, over 40 would be even better. Obviously, over 50, 60, 70 is even greater than that. But as a low end, over 30, you've got volatility expanding here in Target. Let's take a look at what it looks like on a chart. You can see Target's kind of been doing its own thing, not really correlated with the market. It's trading at almost its yearly lows here, and the market's actually caught a little bit of a bid. I'm going to play it pretty neutral here. I do listen and read all of your comments, and I appreciate them all. I thank you so much for the kind words and all the suggestions too. One of the people were asking me, like, what is this TWIVR? What I'm showing you here is this IV rank. I have it graphed here, how it's behaved over time. You can get that by clicking on the indicators right here. And then a TWIVR will be on this left-hand side. I believe it'll be the first, second, or third one down. You click Add Select and Save, and then you too will have what I have down here. It's just a graph, a chart of what implied volatility has been doing over your time frame that you have set on your Tastyworks platform. All right, let's go into Target. In Target, I told you I have a January and a February trade. In Target, I'm going to be trading February. Let's get rid of this for a moment. I'm going to be trading February. Why February? 64 days to go. I listened to the research team today. We're looking to take trades off with 21 days. That only gives us 2 weeks to January. Really got a couple of days of vacation in there. So you know what? I don't really trade Target that much. I'm going to give myself a little bit more time to be right. I also listen to the people who write in saying, hey, can you use a trade that uses less buying power? This trade will use less buying power, but I got a little bit of a kicker for you. So or a little bit of a lesson for you. So let's take a look at that. All right, so what am I going to do? I'm going to show you exactly what I did in Target. I went to around the 20-ish delta option. I'm looking at selling the 130 put. I'm going to define my risk for those people who want to use less buying power and have defined risk. I'm going to go all the way down to the 100 put, the 100 put. Now that's $30 wide, so you know how much buying power you're going to use. It's the amount of credit minus the width of the strike, so you're using $2,700 and change here on this one put spread. But I'm going to make it an iron condor. I'm going to go up to the 195. I'm going to go up to the 165. Calls has the same 20 delta. It's going to be a delta neutral trade. I'm going to go the same distance higher. I'm going to go to the 195 calls and buy one of those, and you'll see that the buying power reflects exactly what you're getting on the trade, which is $4.55 minus the width of the strikes. If you add 455 or 460 to 2540, you get $3,000. That's the width of your strikes. That's your max loss on the overall trade. This trade has a 67% pop. I love the probability of success being above 60, preferably above 65. You can see it has actually no delta. 0.86 is about as delta neutral as you can get. $6 or $7 a day in theta decay, and beta weighted to the S&Ps, it's basically 0.2. You can do better than I did. I got filled at $4.50. It's $4.55 as a mid price right now. You can see the natural bid is $4.47. The natural offer is $4.61. Very tight markets in here. Delta neutral in Target, and I'm doing it in February, 67% pop. Let me show you something. $2,500 in buying power for this trade. Now, of course, you could move it a strike or two in to make it less buying power for you. Here now you're down to just about 2,100. Of course, the credit you receive is going to be lower. Here you are getting just under $4, $3.95. You're using $1,600 in buying power. You make the trade to fit your buying power. So I just showed you what I'm doing and the amount of buying power I'm using, and I'm also showing you how you can make your trade use less buying power so you can always fit the trade. You don't lose much buying, probably a profit, 65% from 67%. Of course, the wider you can go. I'd rather see you do one contract $30 wide than do two or three contracts $10, $15, or $20 wide. Less contracts wider, higher probability of success. More contracts tighter, less probability of success. What I want to show you here is if I get rid of these two legs, my buying power is actually going to be less than my original $30 wide iron condor that I was going to do in a margin account. So here is an advantage of a margin account. $1,450 in buying power, and you're collecting $5 and change in credit received, where we only got like $4.50 in credit. So you get more credit and use less buying power. That's the advantage of a margin account, and you've got 68% pop, basically the same exact pop as what you had on the Iron Condor, the original one, the $30 one, $30 wide one that I showed you. All right, next trade that we're going to take a look at here is a name I think a lot of people are familiar with. It's Apple, AAPL. Apple down $5.23, just about its low for the day. It too has volatility expanding by 2%. But look at this, you've got earnings coming January 26th, so you can already realize that I'm not going to put on a February trade because I want to avoid earnings, right? Earnings January 26th is 6 days after expiration. On the Tastywork platform, the expiration dates are right here. Expiration is January 20th. Let's take a look at what the stock has been doing. You can see volatility, Ivy rank expanding, Ivy rank of 47%. Really nice in Apple at the high end of its most recent range. And by most recent range, I'm just taking the last month or so in Apple. 47%, pretty good. Stock has been getting hit as of late. It has a high 86% or 0.86 correlation to the overall market. So when we take a look at this trade, our deltas beta weighted are going to be very similar to what your delta is in Apple to begin with. Let's take a look at what I'm doing. So like I told you, I'm going to avoid earnings. I'm going to go into January. I'm going to play this with a little bit of a long delta. I'm going to take a shot here on delta, and then I'm going to explain to you how I'll adjust this. I'll probably adjust it very, very quickly. I'm going to sell the 35 put. That's the 135 put that has a 40 delta. Unfortunately, it's $5 wide strikes until after expiration this weekend. So it's either the 30 delta, which has the 30 strike, which has a 27 delta, or the 35s, the 135s, which have a 40 delta. I'm going to go to the 135s. I'm going to play it a little bit long in Apple, just because I thought the market would have a little bit of a bounce in the coming days. So if the market, like I just told you, has a little bit of a bounce, Apple has a very high correlation. I'm going to make the assumption that Apple's going to keep that correlation, although you never know what can happen. I'm going to say that it's going to happen that way. I'm going to sell the 135 puts, and I'm going to sell the 150 calls. That's trading for $5.90. You could do better than me. I got filled on the natural bid. I got filled at $5.87. So Apple has come down a couple of pennies here, and volatility is probably staying bid with the market getting hammered a little bit here. So you can get filled even better than I got filled on here. Mid price is $5.90. Usually can move at 1 or 2 pennies, and you get filled pretty quickly in Apple. Again, this is a trade that only has a 57% pop. I like that 60. But again, I'm skewing it because I want to have a delta trade on. I want to be long deltas. I still want to have better than a 50-50 shot. This is around 57% just because I'm inside the expected move on the downside. My theta decay is $12, so I get compensated for some of that delta risk. My beta weighted deltas, like I said, 86% or 0.86 is the correlation. Your beta weighted deltas in SPY, those are the beta weighted delta in SPY, high correlation at 7 versus the 17 that it has in Apple. Buying power effect, $2,300, similar to what we used in Target with the Iron Condor, more than what we used in the margin account. Why? Because Apple has a higher implied volatility, wider range than Target is expected to have. Again, people always ask me to maybe take a look at this trade on the curve view. This is the curve view. I just clicked right here on the top. It says table, curve, active, grid. I clicked on the curve mode, and here you can see where the stock is. You can see I have more room to the upside, which makes it a bullish trade. I have less room to the downside. These are my strikes that I'm selling. I'm selling the 135 put. I'm selling the 150 call. This line in the middle here, let's call it burnt orange. You can see how I'm just inside that expected move, and that's why my probably profit is 57 and not closer to 65, which I do prefer. But again, I'm taking some delta risk on here. All right, those are my 2 trades for you. Happy trading to everybody out there. Enjoy your weekend. If I don't get to see you again, please open up an account at tastyworks.com. Help us keep the lights on here and take advantage of all of the perks we have for opening up an account. Plus, the features on the Tastyworks platform are just awesome. Have a great weekend, everybody, and happy trading.